Hey Lions, what's good? Today we're going to talk about divergence, what it actually is, how to actually use it, some of the mistakes people make, and much more. So if you want to learn this divergence strategy, is super profitable when done right. Make sure to watch the full video, and as always, if you do enjoy this video, make sure to smash that like button. It really does help me out a lot. And without further ado, Trading Lion, take it away. Right, so for this divergence strategy, we're currently on Euro GBP currency pair 4-hourly time frame. Divergences are usually also combined with other indicators such as the momentum indicators, momentum oscillators, so RSI, stochastic RSI, CCI. All of these work very well when trading a divergence strategy. That's why it's very important to open up a chart. I'm using currently stochastic RSI. If you want to go inside indicators, type in RSI. You can use, as I said, the relative strength index, this one, or the stochastic RSI, which I'm using on this video. Now, once you select, leave the default settings on, and you should get something in regards to this. Obviously it's going to be somewhere around here, so just extend it so you can see it much more clearer, because we're going to be drawing a few lines on it. Now, to explain everything clearer, I think we should use the replay tool. Let's say we are somewhere around this area over here, right? So this one is going to be a bullish divergence, right? So what we need is to find lower lows. How do we find them? Well, we are having a look at what's going on here. That's the first thing, right? It has to be, outside this band. It has to be outside this band. So once it's outside this band, you have a look. Okay, this is happening over here. We mark this area zone, right? So basically the stochastic RSI is reflecting whatever the candlestick is doing. This is obviously not yet a signal, so we need to find a lower low. We always need to find a lower low. This is a new lower low, right? Because this previous area zone was respected multiple times. If we just draw a line through it, as you can see, multiple times it has been touched and respected, then shot towards the upside. Once it breaks like that, it means it's a new lower low in this area. So we mark this area over here. We can even draw a little trend. There we go. This is a nice trend. So we know now that this area zone is respected, right? It's a new lower low. Now what we need to do is have a look here. As you can see, it's also outside the band. However, what we need to actually find out is whether this area of sensitivity is a higher low. And as you can see, it's currently shooting towards the upside. It's not a straight line, and that's what we want. As long as this area zone is a little bit upper than this one, it's a perfect trade. It means the divergence is definitely there, and probably it indicates strength for the bullish market, right? Because the bears are currently exhausted. As you can see, they had this push towards the downside. Very likely they're gonna have some sort of exhaustion before maybe respecting and pushing again, or breaking through this little downtrend that we have over here as well. So since we see this confirmation, we can already place a trade towards the upside, and this could be a nice divergence. So if we place this trade already, we could have probably profited some money, but obviously I would always recommend placing trades with a bullish engulfing candles and all that. Plus, if you're a swing trader like me, you would obviously wait for a break of this area of downtrend as well. However, that currently doesn't matter. What matters at the moment is we know that the bears are currently getting exhausted. We don't know when, but there's going to be a turnaround at some point. So let's just see and play the tool, right? So currently shooting towards the upside, respecting the downtrend that we have just drawn. And as you can see, shot towards the upside. Do we place a trade? No, we're waiting for some sort of move. And there we go. This move over here is perfect. Look at this move yet again. If we just draw this line across, it's going towards the upside. Every time it touched this area zone, right? First time, second time, third time, it always closed a little bit higher. And this shows that the bull pressure is coming in. The bears are getting exhausted because all these lines over here the stochastic RSI lines are not getting pushed below this area zone, and this means that the sellers are weakening and the buyers are strengthening. And as you can see, it's like a trend over here shooting towards the upside as well, and every time it pulls back a little bit, very likely there's a reversal coming in. So where would I enter this trade? Is simple. I would wait for this break of area of trend line. As you can see, this area of trend line multiple times respected. Every time it touches, shoots down, shoots down, shoots down. Now we're seeing a very big bullish candlestick. However, we wouldn't enter the trade yet because he hasn't broken the trend line, so we're waiting. But we know for a fact that the trend reversal is very much near, because as you can see, even from this zone, this is where we spotted. This is the area of sensitivity where we would have probably already bought the trade off. Over here, maybe a bullish engulfing candlestick with an 80 pip stop loss could have been a pretty damn good trade. Shoot towards the upside to the previous area of resistance over here. 1 to 6 risk to reward ratio, not the best, but potential trade. Or you could have even waited for this scenario over here that is developing, and we should wait for it because, as I said, it's trending towards the downside. And as swing traders, we would have to wait for a push towards the upside, breaking this area zone, getting a pullback, and then a bullish engulfing candlestick as well, shooting towards the upside. So let's see if we get it right. So as you can see, shot towards the upside, broke through. We didn't get a bullish engulfing candlestick, which I don't like personally, but let's see what will happen. Shot towards the downside, now pulled back to the previous area of sensitivity. Obviously this downtrend that we had, we didn't get a bullish engulfing candlestick yet. We wouldn't have entered the trade yet. At least I wouldn't have. Some people, you know, breakout traders, reversal traders, whatever, they would have entered this trade straight away towards the upside, and you could have potentially made money even if you entered somewhere around here, you know, around 40 pips profit at the moment. However, I would have waited for a bullish engulfing candlestick. If you don't know what a bullish engulfing candlestick is, the blue one is swallowing the red one. It's a bullish engulfing candlestick, and vice versa if it's trending towards the downside. Let me just actually show you. This is a bullish engulfing candlestick. This is what I mean. This is what I'm talking about. If we get something in regards to this, a bullish engulfing candlestick, when we are breaking this area zone, it's a perfect trade towards the upside, because we had our divergence signal that a reversal is coming in. This is the second time, as you can see, we touched here. We could have potentially placed this trade, shot towards the downside a little bit, you know, had a pullback and then shot towards the upside. We could have potentially, as I said, placed the trade here, but it would have went down a little bit, maybe 80 pips. If you have a very small stop loss, you could have been stopped out. I usually go for 80 pip stop loss anyway, because my trades are like 160 to 80, but that's my own personal preference on the 4-hourly time frame. Because I trade 4-hourly, 12-hourly and daily, I need a little bit bigger stop losses. But you can do the same thing with divergence on the 1-hourly time frame, and obviously smaller stop losses as well. Now I feel like we should have a look at other currency pair, in case I didn't explain it correctly, because sometimes I do that, I waffle a little bit as well. But have a look. Right, so this is an area of sensitivity, right? This is the previous higher high, as you can see, shooting towards the upside on the stochastic RSI, so shooting towards the upside as well. Do we see a divergence at the moment? Of course not, because we haven't got another confirmation over here. It hasn't been shooting towards the upside, you know, and respecting an area zone before going down, so we need some confirmation. So what we're gonna do is just release and play. So let's see what is happening. Currently shooting, okay, forming candlesticks. And what we're gonna need is as you can see, we need a higher high. So this higher high is not good enough, although it's not even a decent higher high, to be fair. It's basically nearly the same thing, but it's a little bit higher. This wouldn't have been good, because as you can see, the stochastic is in the middle. That's not what we want. We want to mark the higher highs over here. So if we just mark the higher highs, look, this area and this area. So first higher high over here, now second higher high over here, right? This zone was respected. As I always teach you guys, shoot exhaustion, shoot again exhaustion. So basically the same concept. You get it, right? Now, as you can see, we marked this higher high trend line, whatever you want to call it, you know, divergence strategy. And basically, why is this good now? As you can see, if we just do the trend line the opposite way, basically, that's why I'm doing the second pair, just to do it the opposite way. As you can see, it's trending down, right? When it's making lower highs, that's what you want. This is basically the divergence strategy, and its strength is immediate because it shows a nice reversal trade. It shows that the bulls, you know, this trend line over here, you know, this huge push towards the upside is getting exhausted because it's not pushing above this area zone. It's not even pushing near this area zone. As you can see, if we just use the horizontal line, let's just mark the previous high. There we go. This is the horizontal line, right? So this area over here should have shot towards the upside, at least reached the zone or past it to confirm a nice trade towards the upside to potentially make a new higher high yet again, right? But it's not happening, right? It's being respected over here and it's lower than before. So it means that the bull pressure is getting exhausted, right? And the sellers are coming in to sell the market, to take over, to dominate the market. So the red candlesticks will probably, very likely, dominate the market. So what you do now in this case, since you established the divergence, you should really mark area of sensitivity, right? So we mark area of trend line now. So where's the area of trend line? If we just quickly mark it, let's say somewhere around this area where the most touches are, that's where I usually mark. I would think this area zone is decent enough. As you can see, would have been like a touch here, obviously a bullish engulfing candle here, but touch, and touch again, which means, you know, 5 touches over here, pretty damn good. We need to break this area zone, have a pullback, and then go towards the downside. This is the ideal scenario I'm talking about. This is what I would personally do. But some of the traders are a little bit riskier and they would just wait for a break towards this trend line, and because they know they have this divergence over here forming, they would just enter the trade when it's broken. And it's totally fine to do that as well if you're a little bit of a riskier trader. It is a little bit less profitable if you do that. I like to trade, you know, setups. I like to trade and follow my trading plan, and I always trade after the breakout once I get a confirmation, you know, a bearish engulfing candle, a bullish engulfing candle, before I do anything else. Right, so let's have a look what is gonna actually happen. So it's shooting towards the downside, and this is where I would enter the trade. Why is this a good trade towards the downside? Well, as you can see, it was following this nice uptrend over here, right? Every time it touched, it respected the zone, shot towards the upside. Now, since we were making higher highs over here, right? This is the higher high, this is the higher high, right? And this higher high were important because of this divergence. Although this was a higher high on the candlesticks, this high wasn't, you know, this was a higher low, and it's probably indicating that the market is getting exhausted and gonna go towards the downside. And now, since we got a bearish engulfing candle close, as you can see, this blue candlestick is getting swallowed by this red one, we can definitely place a trade towards the downside. So this is where I would potentially enter, have my stop loss a little bit lower, maybe 70 pips or something like that. And if you want to learn more about stop losses, you can find a ton of videos on my channel as well. Make sure to subscribe. But let's have a look. So now if we play it, okay, shooting towards the upside. Now we nearly get stopped out, but then look what happened, and then it shot towards the downside. So the divergence worked. Obviously, stop loss was a little bit tight, not gonna lie. As you can see, very tight stop loss. So it did pull back and respect this area zone, which I expected. That's why you should always, you know, enter your, you know, have your SL a little bit higher, because once you hear, let's say, in this area zone, you need to imagine what the market will do. If it's gonna turn around straight away, which it pretty much did, had some sort of consolidation and shot towards the upside, you have to remember that if it shoots towards the upside and reaches this area zone, is it gonna have enough space before you get stopped out? If not, you will get stopped out. If yes, you'll be fine. More than likely will turn around because you analyze the divergence. We had a bearish engulfing candlestick. More than likely is gonna be a bearish market, right? So as you can see, shooting towards the upside before nearly getting stopped out and now shooting towards the downside yet again. But this still would have been my trade to go for. Bearish engulfing candle close. That's my signal that I like to get. Obviously some people can agree, some people disagree, but this is my strategy. This is the way I would trade divergence. It's basically reversal trading in a sense. And if you want to see me trade live with divergence, make sure to comment down below, and if I get a lot of comments and likes, I will do that for you guys. So if you do enjoy this video, make sure to subscribe, like, hit the notification bell. It really helps me out a lot. Join my free signals group. We're literally sending free signals, doing giveaways, all bunch of stuff I have planned. Anyway, peace out guys, have a wonderful day, stay safe, and goodbye.